Hello, everyone, and welcome to the Apollo Capital Quarterly webinar. My name's Tim Johnston. I'm Managing Director of Apollo Capital. Thank you for joining us. What a quarter it has been in crypto markets. It's been an incredible quarter with strong performance. And today we'll be joined by Henrik Andersen, Chief Investment Officer, to provide an update and also to give investors and our network an opportunity to ask Henrik some hard-hitting questions about crypto. For those new to Apollo Capital, we're Australia's leading crypto asset fund. We manage two funds, the Apollo Capital Fund, a predominantly long exposure to the best crypto assets in the space, and the Apollo Capital Opportunities Fund, which provides yield, sophisticated trading strategies to generate a yield from crypto assets. We are going to be running these webinars more frequently, hopefully on a quarterly basis, and to provide an update to our network. Please, as I mentioned, the format today is to receive that update from Henrik, but also to ask questions. So if you could please do that in the chat functionality in Zoom, that would be great. So Henrik's going to provide about a 15-minute update. We'll have about 15 minutes for questions, or a little bit longer. But before we do have some very exciting news that we are lucky to be joined by Apollo's latest investment partner, Mark Woodward. Welcome to Apollo, Mark.
Thank you, Tim. It's great to be here.
So Mark, if you could just provide everyone a bit of background on yourself, your story, how you got involved in crypto.
Sure, happy to. Hello, everyone. So I'm originally from the US, have been here in Australia for about 17 years. I became a dual citizen in 2019, so very happy to be here. I studied finance at Georgetown in Washington, DC, started life as a software programmer, and then moved to the West Coast of the United States, where I got into investment banking, working mostly with early stage high-tech companies on the communications and software side. I then moved down to Silicon Valley, working for a top-tier VC firm called Battery Ventures, which is well known on the east and west coast of the US. These days, it's about a $3 billion VC fund, investing across the spectrum of startup and later stage companies. I moved to Australia in 2004 to help run a investment fund for Gresham Partners, also focused on early stage companies. Ran my own fund with a partner for a few years and spent time as a software entrepreneur for a Australian startup. So it's been quite the journey, sort of in high tech. Got involved in crypto in 2017 during that initial ICO boom and bust. So certainly have the scars of that time, but have stayed active investing in the space since then. Met the Apollo guys in 2018 as they were launching the fund, and kept track of their progress. And as things started to heat up in the market, joined last year as an investment partner, as Tim said. So far it's been a great 6 or 7 months, and I look forward to the future.
Excellent, Mark. And what are you going to be doing for us at Apollo with your VC background? Many will know that one of the buckets that we structure the multi-strategy flagship fund is to new projects. So what are you going to be doing with us?
Yeah, that's right. Great, segue. I'll be spending quite a bit of time with Henrik and the team working on early stage projects, both sourcing them, identifying the opportunities in the market, and then executing on the investments. Certainly will be spending a lot of time with new investors as well, to try to extend my network in the US and Australia for Apollo.
Yep, and we should mention that most of the Apollo team is based in Melbourne, but Mark is in Sydney. So if any of our investors or any of the network that are based in Sydney that would like to meet Mark, please let me know, and very happy to facilitate an introduction.
That'd be great.
Thanks, Mark. So we're going to throw to Henrik now, who's going to provide us with an update on crypto markets over the last 3 or 4 months.
Fantastic. Yeah, thank you, Tim. And really great to have you on board, Mark. Very high caliber addition to our team. And I think as we are approaching that $100 million AUM, we'll see you will see us add more team members to the investment team. It's currently myself, the CIO, Mark, and Matt, our analyst, that's on the investment team. You might have seen that we recently put out a call for an analyst as well, another analyst to join our team. And we hopefully will soon announce that we have a developer that is joining the team as well. So we will hope to expand the team further in the coming days and coming weeks. When it comes to the market, obviously a crypto bull market right here for the first quarter. The fund, now speaking about the Apollo Capital fund now, was up just over 141%, and that is outperforming Bitcoin in a fairly substantial way. And I think that's thanks to our focus on DeFi assets. That's really where we are seeing the growth in this market. So by some measures, the DeFi market has increased 100x in activity for the last 12 months or so, if you're looking at measures like total value locked, TVL, for example. So I think our performance is very much thanks for our kind of disciplined approach investing in the DeFi market. When we look at Bitcoin, sort of over the longer term, I think we've seen the Bitcoin dominance, which is a measure looking at how big part Bitcoin is of the overall market. We've seen that measure decline over time, and I think it's likely that we will continue to see that Bitcoin dominance figure go further down over time. It currently sits around 47% of the overall crypto market. So meaning that the crypto market is around $2 trillion today, and Bitcoin is just less than half of that. And I think as you see more and more growth in the DeFi space, you will probably see that Bitcoin dominance index decline over time. And I think this points to having a diversified portfolio in crypto. That's the best way that we think that you should have an allocation into crypto. And I think the other point there is that we think that you need to be actively managed in this space. So you need to have kind of a diversified portfolio, but you also need to be actively managed. So again, going back to our performance figures, one way to look at that is to look at our performance over the long term versus something like the top 20 crypto assets. So you've probably seen in our reporting, we like to compare our returns to Eureka Hedge, but also to top 20, crypto 20. And if you look over our inception period, the 3+ years that we have over track record, we have outperformed that crypto 20 index by 10x. So since inception, the Apollo Capital Fund is up over 300% since until end of March, and that crypto 20 is sitting around +30%. So it's a 10x outperformance versus a passive allocation to the space. So I think that's kind of form or basis the way we look at the market. Be active, have a diversified portfolio, and I think the third one is focus on DeFi. So going back to that kind of our investment approach, myself and our analyst Matt wrote an article during the quarter called the 3 pillars of value in crypto, and we talk about there kind of where we see the value creation being made in crypto. So that's around scarce asset, the digital scarcity, and that is in Bitcoin, which is becoming the digital gold. And secondly, that is applied to NFT market, and the NFT market has been very, very strong, especially in the last 3 months. And thirdly, it's around smart contracts. And there our view have been for a very, very long time that the main value creation around smart contracts will be in financial contracts. And I think that's a core to our investment thesis, and that's why we are focusing on the DeFi market so much. And when it comes to the NFT market, it's harder, we think, to find kind of the infrastructure place there that value is created in. So obviously we're not investing in individual artworks or in-game assets or anything like that. We are really looking at infrastructure plays in the portfolio, and that is just a little bit harder to find that in that NFT space. But definitely we remain bullish on Bitcoin and the DeFi space. Maybe on the finishing off on the macro front during Q1, I think you know, we all talked about institutions are coming for the last few years, and that is really starting to happening, and especially in Q1 of 2020 that has really 2021 that's really accelerated. So we have seen the likes of Tesla diversifying their balance sheet. They bought $1.5 billion worth of Bitcoin during the quarter, following the likes of MicroStrategy, Square, and others. We've also seen institutions like Visa, MasterCard starting to adopt crypto as payment rails. So Visa, for example, announced that they are trying out stable coins on the public Ethereum network as a payment rail, which makes a lot of sense to us. And we have seen large investment banks starting to write really fundamental research around crypto. We have even seen some of the biggest banks in Southeast Asia starting their own crypto exchanges. So institutions are coming, and that is just accelerating right now, we believe. When we kind of maybe dig a little bit deeper into the quarter and the trends, I think one of the big themes was the acceleration of alternative layer ones, so alternative blockchains to Ethereum. So most of the DeFi activity is currently happening on Ethereum, but during latter part of last year, the transaction fees on Ethereum became very, very high. Because of all our activity, there's a lot of traffic and congestion on the Ethereum network, which drove up the prices, and that has led to a lot of activity happening on alternative to Ethereum as well. So I think that talks about our benefit of having that diversified exposure to other chains in the portfolio. So things like Binance Smart Chain, for example, we've had a BNB in the portfolio for quite some time now. Had a tremendous run in Q1. We've seen a lot of activities on other networks as well, like for example, Matic, which is also part of the portfolio. We have had Avalanche in the portfolio. We were one of the early investors in Avalanche, and we have seen activity on that chain as well. And this is an interesting trend. Both Ethereum, Binance Smart Chain, Matic, they're all EVM compatible, meaning that the developers can very easily roll out the same smart contracts on these other chains. And this is becoming a really competitive advantage if you have a blockchain that are compatible with Ethereum, because then it's much easier to build that network effect, which is so important. Having said that, we have exposure in the portfolio to non-EVM blockchains as well, like Polkadot, like Solana, for example. And there are quite some excitement around both Polkadot and Solana. So that's a little bit, I think, probably the biggest trend we've seen in Q1. And then, of course, we have seen development when it comes to scaling Ethereum itself. And that's one of the biggest trends we believe for this year, scaling of Ethereum. And personally, something I'm super excited about, because if you're going to scale DeFi to more than the 100 million people that are involved in crypto today, we need a lot of scaling on Ethereum, and that is happening right now. So there are a couple of solutions that are called layer 2s that are rolling out as we speak, and we will see more of that later in the year as well. Ethereum has been a really strong asset. and there are some hard events coming up for Ethereum. So we have a hard fork called the London hard fork coming up in a couple of months. You probably have heard of EIP 1559, and I think the main takeaway from that upgrade in Ethereum is that the inflation rate will go down. The majority of transaction fees will be burnt, which will decrease the issuance of ETH. And then later in the year, Ethereum will start transitioning to proof of stake. So like Bitcoin, Ethereum has been a proof of work chain, but that is coming to an end. And potentially already by the end of the year, that merge will take place. So the current Ethereum environment will move to the proof of stake chain, which is already live. So that will be perhaps the biggest upgrade in Ethereum's history that we can look forward to.
Henrik, if I can interrupt with a question about that EVM, Ethereum Virtual Machine compatibility. Do you see that as a way for the challengers to disrupt Ethereum, or do you see that as further strength of Ethereum's network effect?
Yeah, that's a good question. So maybe a little bit of both. So for example, Binance Smart Chain, I think there's quite a separate community on Binance Smart Chain. People who enter crypto through Binance and they start using Binance Smart Chain. And those people on Binance Smart Chain might not be the same people we have in the Ethereum community, but it's been very easy for developers to launch apps on Binance Smart Chain because it's the same code as on Ethereum. So people can fork the code of popular projects on Ethereum and launch them very easily on Binance Smart Chain. Having said that, we have also seen some of the major projects on Ethereum launch their own versions of the app on Binance Smart Chain. Projects like 1inch, Alpha, and other projects launch on Binance Smart Chain as well. So I think you see a little bit of both. Matic is becoming very popular as well. We've seen Aave and Curve launch on Matic recently. So we've seen these kind of side chains become popular. And then now optimistic rollups are about to launch. And I think we will see perhaps a consolidation back to Ethereum once the scaling solutions are there on Ethereum. So just maybe mentioning what's happening in that scaling space. So I think rollups in general will kind of bring a 100x scaling to Ethereum. So the rollups will be able to support somewhere between 1,000 and 4,000 transactions per second. And then at a much later date, Ethereum will upgrade to Ethereum 2.0 with sharding. But that is pushed out sort of 1.5, 2 years from now, perhaps. And that would bring another 100x in terms of scaling to Ethereum. Maybe worth mentioning some of the primary activities we've done. So I think for the past 5 or 6 months, we have invested sort of 1 project per month in the primary market. Again, focusing on the core verticals in DeFi that is our focus for the overall fund. So verticals like lending markets, like DEXs, like derivatives. I think those 3 are probably the main verticals within DeFi, and that's where we focused our primary investment activity as well. And I think we mentioned in our latest quarterly letter some of those projects that we invested in. Projects like Chainflip and Handle, both coming out of Australia. Again, Australia, and I made this point a few times now, Australia has really seen a lot of projects coming out of Australia, much more than perhaps anyone would have thought. We have other Australian projects in the portfolio as well, like Synthetix and Ren. And I think that's been one of our benefits globally, being based in Australia. Having so many world-class DeFi projects coming out of Australia has been really amazing to follow. maybe just mention a couple of other projects we invested in as well. One is Pocket, which is an infrastructure project on Ethereum, and one is Automata, which is a front-running infrastructure project protection that is under development by ex-Silica engineers. And I think maybe we'll hand it to questions there. Maybe we should mention something on the Opportunities Fund as well, because most of it we talked about so far has been the flagship fund, the Apollo Capital Fund. But as Tim mentioned, we launched a second strategy in December last year, which is the Apollo Capital Opportunities Fund. So a very different risk profile. The Opportunities Fund is an absolute return fund, meaning that we are looking to achieve a return while not taking crypto price risk. So it's a US dollar denominated fund. The target return there is 30 to 50% net of fees per annum. And so far we have been achieving that kind of returns. The monthly return so far has ranged between roughly 3 to 5%. And the main strategy in that fund is to provide liquidity in the DeFi market. So by doing that, we can earn a yield by the activity in the DeFi market, all the trading that is going on there. We can earn a kind of a commission on that trading in some cases. We can also earn governance tokens, which is one way to look at that is you earning equity in those protocols where you are providing liquidity. So we've been involved in liquidity provision in the DeFi space for quite some time, the Apollo Capital Fund. And last year we decided to spin that out into a new fund, which is the Opportunities Fund. So we think that's a really attractive risk return profile as well. That is kind of independent of crypto prices and much less volatile than the main fund. So maybe we will go to Q&A there.
Yeah, excellent. We've got some good questions coming through, and everyone, please feel free to keep them coming through the Q&A function in the Zoom webinar. So first question, Henrik, I'll divide it up into a couple of different questions, but this is from Katharina. Do we use charting extensively in our analysis?
Our fund is mostly fundamental driven in nature. So we are looking at the fundamental outlooks of crypto assets. So not so much charting in our strategies.
And this question is, I might throw to you, Mark, actually, because we like to think of Mark as our resident NFT expert. Are we investing in NFTs as yet? And maybe, Mark, you can provide a high-level overview of what NFTs actually are.
Sure. So NFTs have sort of, they've been around since 2017, 2018 with sort of the CryptoKitties craze that actually crashed the Ethereum network and then sort of crashed that whole segment, but have since gotten widespread adoption with existing digital artists as well as, traditional artists who want to what's called mint their art on Ethereum. So they're basically creating a digital version of that artwork, and they're using an NFT, a non-fungible token, which is a unique token that attaches to the artwork that has the history of when the art was created, when it was purchased, who it was purchased to. So it's been a very exciting space, and I'm sure if you guys have been following the crypto space, you've heard NFTs all over the place. What I think is really interesting about it is that as more and more of our world goes online, becomes digital, I think people are more accepting of having their assets and their artwork and their entertainment and more of their lives online. And now that's all coming onto the, it's coming onto the blockchain. From the artist perspective, why are they doing this? Well, through the blockchain, through these NFTs, you can track when all the artwork was sold, who bought it, who they transferred it to, and you can build into the smart contract royalties. So an artist at this point, if they sell an artwork, the first time they sell it, they usually get about 80 to 90% of of the purchase price. And then subsequent sales, they'll get 10 to 20%. So think if you're an emerging artist and you're selling artwork to for your rent or for your bills, but in the future, after that artwork is sold, you don't get any of the royalties from it. Well, the blockchain and the NFT structure changes all that. So you can continue to get royalties in the future from all your sales. So that could be incredibly powerful in the future for yourself, for your heirs, for your children, for your foundation, if you become, the next Andy Warhol. So it's quite exciting. I personally am a big investor in NFTs, sort of fell into it and then just sort of, just started buying all the artworks that I like. I'm a big fan of Trevor Jones and Beeple, two of the top artists in the space. Also Pack, he's another one. Those are probably the top 3 guys. So I've got quite a growing collection. But as a fund, we don't invest in them. We do invest just only in the underlying infrastructure that is going to benefit from this NFT space.
Excellent, thank you, Mark. Back to Henrik, another question from Katarina, good question. Do we stake any of our coins, Henrik, or the fund's coins?
Yeah, absolutely. So, for some of our assets, there's definitely opportunities to make quite a bit from staking coins, from earning that revenue in DeFi assets, for example. I recently looked at our SNX stake, and we've earned over $1 million so far in revenues from staking SNX. So this is an area we are very active in.
Excellent. And I thought we'd get this one. A couple of people saying they have to ask about Dogecoin. What's the house view on Dogecoin, Henrik?
Yeah, so I think this comes back to this thesis that you need active management in this space. There are a lot of inefficiencies in crypto. So we see Dogecoin, we see Ethereum, XRP, both in the top 10 of crypto assets currently, with questionable long-term value. And I think this is where active management comes in.
So fair to say bearish?
I mean, long-term, it's hard to see kind of this valuation keep up.
Yes, I love a good risk question. I've got to go on here from Michael Prendeville. How do we manage your exchange counterparty risk?
That's a good question. We have a very small number of exchanges we trade on that we believe are trustworthy, and it's becoming easier and easier to manage that because there's a lot of network effect around liquidity. So exchanges like Binance and FTX are taking a very large chunk of the volumes out there. And also today there are a lot of liquidity on DEXs. So you actually don't have to trust a third-party counterparty like an exchange, because the liquidity today is superior for many of the assets trading on DEXs. And the second part of that answer is that we try to limit the exposure to exchanges. So, unless necessarily we don't leave funds sitting on exchanges.
Yeah, so just to add to that, we've got a risk management framework where 20% of the fund's assets, or a maximum of 20% of the fund's assets can be on exchanges, and only 10% on any one particular exchange. Good question here from Josh Sensible. So Bitcoin and crypto seem to run in cycles. Bitcoin's 4-year cycle probably being the most well-known. How do we plan on positioning the fund as crypto mania takes over during this particular bull market? And how do we preserve value during a possible bear market to follow?
Yeah, sure. So the value in crypto has gone up over the long term. So if Bitcoin has been around for a bit over 10 years now, and it's been the best performing asset class. And as more and more people get into crypto, we think that long-term value will increase. But in the meantime, there will be a lot of volatility, right? If we think that we're in bubble territory, we will kind of increase the position in market neutral strategies. So for example, the Apollo Capital Fund has currently a 10% allocation into the Opportunities Fund, which is the market neutral strategies we run. And in that case, we will increase that allocation maybe going to 15-20% of the portfolio if you have a bearish outlook. We will also decrease smaller, higher risk positions and increasing allocation to something like Bitcoin, which is the blue chip asset in the space.
Good segue to next question from Adam Newton. Big picture, what do we see the potential of Bitcoin as a global digital store of value? Big picture, what is the potential value of a dominant globally adopted decentralized network protocol such as Ethereum? So I guess two questions there, one on the Bitcoin and one on Ethereum.
Yeah, so sure. So on Bitcoin, I think the widely used comparison there is gold and the value of gold, which is around $10 trillion US. We know how many Bitcoin is around and how many there will be, 21 million. And you can easily calculate that. That means that to kind of have Bitcoin as a global store of value, taking the place of gold, Bitcoin has a potential to reach $500,000 in value. Now, this is only a rough sort of guide. There are other use cases for Bitcoin as well. There are, I think, $15 trillion in offshore accounts and so on. So kind of, but that kind of think gives some kind of range for where Bitcoin could go. For ETH, I think the financial sector globally is even larger than a store of value. And so far, most of that activities in DeFi is happening on Ethereum. We believe in a multi-chain future, so it's unlikely we believe that all that financial infrastructure activity will happen on Ethereum, because different applications will have different needs when it comes to scalability and censorship resistance and so on. Definitely, a hard fork coming up in a couple of months will be somewhat of a watershed moment when it comes to ETH, because that inflation will come down a lot when it comes to ETH, and sort of the price of ETH will be more coupled with the activity on Ethereum, because it will lead to more and more transactions, leading to less and less inflation as those transaction fees are burned. So there will be a very strong connection between the ETH price and activity on Ethereum. We should be bullish for the price of ETH.
And we've had this question twice from Saul and from Jeffrey Lang. Do we invest in equity positions, or do we stick to tokens? How do we structure the investments?
Yeah, our expertise is in crypto, and that's where we're focused on crypto assets. So no equity. We have mainly a liquid portfolio, or very fast path to liquidity in crypto assets, and that's where we believe the value creation is mainly accurate in this space.
Excellent. What have we got now? On the opportunities fund, so the yield side of things, interesting question here from Ryan Gillis. What of the market neutral strategies do you see being arbitraged away? How long do you think these inefficiencies can last?
Yeah, good question, right? Currently, the yields are very, very healthy. They were even higher during some time last year. So they go up and down. I think the inefficiencies will remain in the market. So most newer investors coming to the market will invest in BTC. So if you're looking at the bigger institutions there, I think it's fair to say that they're just getting their head around BTC at the moment. So DeFi liquidity provisioning is pretty far away from that capital, and maybe some institutions are starting to get their head around Ethereum, and that's probably been one reason why ETH has been so strong. But we are quite far down the stack when it comes to liquidity provisioning. So we see healthy yields for the medium term. Having said that, we have other tools as well when it comes to the opportunities fund to generate risk market neutral returns should the yield fall.
A question from James Chen. So how do you target 30 to 50% returns in liquidity provision? I think you've touched on that, and the answer, James, is through yield farming. But another risk question, how do we think about counterparty risk, Henrik? Obviously, it's a little bit different to traditional lending. How do we structure the portfolio and manage those risks?
Yeah, so when it comes to, if the question is around the opportunities fund, we don't really take counterparty risk. We don't lend on centralized platforms or anything like that. We keep custody of all assets. So the risks are very different in the opportunities fund. It's more about software based risk and those kind of things.
Yeah, so to elaborate on that, I guess the main risk there being smart contract risk, James. So I guess that's the comparable within DeFi. In traditional finance, it might be counterparty risk. In DeFi, it's the smart contracting risk. Another question from Josh. Do we see any regulatory risks in Australia or US that might affect the ability of exchanges to operate, convert crypto back into fiat? And I guess this is quite a timely question with what's going on in India and their ban of cryptocurrencies.
Yeah, right. So yeah, in the past we've seen China sort of trying to ban crypto, not banning crypto. It's currently perfectly legal to hold Bitcoin in China. Now we are seeing India perhaps trying to ban crypto. I think for any nations that want to not be left behind, like they wouldn't ban crypto, right? Because crypto is becoming more and more an integral part of the internet. You know, there is not one regulator. There are many different countries, and I think more and more people see that the value that is being created in crypto and DeFi. Having said that, you know, we might see tighter regulation when it comes to the on and off ramps, the exchanges. It's very hard to see a ban in crypto in countries like Australia or the US or Europe. So I think that is becoming less and less likely. You know, we might see harder KYC, AML regulation when it comes to sending crypto away from exchanges, things like that. But that's more on the margin, I would say.
Yeah, interesting question here from Jeffrey McAllister on Opportunities Fund. Do we use Nexus Mutual or other tools to insure against that smart contract risk, which we were talking about before?
We haven't done so far. We might be looking at that in the future. We're moving liquidity around quite a bit, so it's not like, you know, we deploy capital on one platform and then we can insure it and then leave the capital there. So we are very, very active. We think we have the expertise and the framework and the processes around evaluating smart contract risk, diversifying, and so far. But you know, the insurance market is becoming more and more mature, and there are many more protocols being launched in that space as well. We recently made a primary investment in one of those protocols.
Great. And as we sort of get towards the end of the webinar, last question from Daniel Boscher, a little bit higher level, but just to understand how the yield is actually generated. If yield is generated by staking, is the income from lending? And if so, what is the demand for borrowing? Why do people borrow crypto assets?
Most of the activity on the Opportunities Fund is through DEXs. So decentralized exchanges have seen an explosion in volume the last 12 months. Over $60 billion per month is traded on DEXs, the biggest one being Uniswap, but there are many, many others as well. And we provide liquidity to these DEXs, so enabling their users to be able to trade assets on those exchanges. So by providing liquidity, we earn that trading fee, and we also earn that governance token in that DEX. I would say the majority of that yield is made up from governance tokens today, but as activity is still increasing on DEXs, that trading fee income is becoming a larger part of the yield as well.
Great. All right. Thanks very much, Henrik. Lots of questions there. Lots of some really good questions. I think we'll wrap it up as we approach 11:45. Thank you everyone for attending. Thanks for the questions. Thank you to Mark and Henrik. I should also mention information today is informational in nature. It's not financial advice. Please don't take it as such. If you are interested in investing in crypto assets or either of Apollo's funds, please seek financial advice. Mark, Henrik, thanks for your time.
Thanks, Tim. Thanks, Henrik.
See you soon.
Thanks, everyone. Bye-bye.